I feel like the conversation is, we want to be neutral duration now. We don't want to own the short end. How do you position into this kind of week?
Well, actually, I'm not sure you don't want to own the short end. Certainly, we've seen interest rates come down very meaningfully in the last 12 months. We were over 3% in U.S. 10-year yields a year ago. But if we look at where we are now, rates have declined for a good reason. We have a broad-based global industrial slowdown. You just mentioned the German factory orders. I think that's the perfect microcosm of what is going on there. And what is the Fed doing in reaction to that? They're cutting rates. And so the old mantra of don't fight the Fed would be very supportive of the front end. If you look at the last Fed meeting in September, what we heard was the Fed saying, look, we will cut if the data get worse. And I think the ISM surveys last week indicate at least the industrial data and also the service side are getting worse. So more cuts support the front end.
But it feels like we didn't get that kind of Fed talk on Friday from Jay Powell. Here's what he had to say after the jobs numbers.
Unemployment is at a half-century low, and inflation is running close to but a bit below our 2% objective. While not everyone fully shares economic opportunities and the economy does face some risks, overall, the economy is, as I like to say, in a good place.
That doesn't feel like a particularly dovish Fed. What do you make from it?
Well, look, in a way, he has to say that, right? Because his report card has two very simple factors, unemployment and inflation, and they're both in pretty good shape. But I think what you want to listen to are two things. One, concern that the weakness that we're seeing abroad or even in the U.S. On the industrial side could be bleeding into the precious consumer side, which is really the backbone of growth at the moment. And the other thing is listen to the comments that Clarida has been making and others at the Fed about this change in framework that will focus on making up shortfalls from its inflation target, because that would mean the front end, the Fed funds rate would stay lower for longer.